but it is time to hit social media for cash tags. We'd like to welcome in Landon Swan, the co-founder of LikeFolio.com, and we have Jenny Horn here with us as well to talk some Dollar General and Five Below ahead of their earnings.
Dollar General and Five Below, yeah. So Five Below will report today post-market, and then Dollar General will be tomorrow pre-market. And these following, of course, Dollar Tree reported at the end of November, and they just got absolutely killed. I think the stock was down something of 18% after they lowered their guidance. So it'll be interesting to see how these kind of follow. But Landon, I know you all have been a fan of Five Below in particular for some time, and we talked about Five Below before their last earnings report in August. So I'm curious to see if sentiment has changed at all going into this earnings report.
Yeah, so these two companies are pretty interesting. They're similar, but they're different. So what's similar about them, though, is the purchase intent is just doing really well for both of them. Obviously, Dollar General is much larger. It has a lot more stores. But both of their purchase intent charts are doing extremely well, near all-time highs. Now, just so viewers know, these two lines are on different scales. So this is sort of a percentage growth look rather than a total linear look at the two of them. So Dollar General is much larger, but you can see that Dollar General in white there is just off of all-time highs, people talking about going to the store on social media, whereas Five Below is hitting basically all-time highs. So they're both doing extremely well. The stock prices are obviously doing a lot different. Dollar General is at or near all-time highs, doing really well. Five Below's kind of hanging around. It had some trouble last quarter. And what we're seeing is that Dollar General is getting more growth on revenue from increasing their ticket size and getting more people in the store, whereas Five Below is mostly getting more revenue from adding stores and not raising comps, not raising same-store sales. I think that's what investors are concerned about. But yeah, they're two totally different companies. They have a similar price model in that you can go in there and buy things not for just $1, like Dollar Tree, who, as you mentioned, did get crushed. Missing earnings and cutting guidance. I think that they're going to be a lot more sensitive to things like tariffs because everything's a dollar. They don't have flexibility. Dollar General and Five Below have a little more flexibility because things are cheap there. You know, they're under $5 or they're cheaply priced at Dollar General. The only caveat is, though, Five Below's testing out this sort of a 10 below theory where things are a little bit above $5, and we have seen a massive shift in sentiment. They used to be sort of our poster child for a very happy customer base at 80%, and that has dropped over the last month or two down to 70%, which is a huge move, and it's all about people complaining about that price increase. So I doubt that will continue. If our data rings true, I doubt that they'll continue with those prices above $5.
Here's the problem, Landon. A guy sitting in Chicago in December talking about the words Five Below causes just a negative sentiment to come over me. I'm sorry. That I get an immediate negative feeling when I talk about the words Five Below in December in Chicago. But I know that this is a discounter, and I would think that them talking about 10 below, which they're another psychological problem, but I would think that would be a growth product for them. I thought that when you said that, when you started talking about 10 below, I immediately thought, whoa, that's got to be positive. And it's not positive for them to be going, because it seems to expand their universe, frankly, right?
Right. I think a lot of it has to do with responding to tariffs. Their margins are getting cut so hard, and when you have that artificial ceiling of $5, it's tough to make money when the cost of goods is going up, and so they're trying to test: can we charge people $6? Can we charge people $7? And I think maybe it's just the discrepancy in the name, Five Below, and then you go in there and you buy something for $7 or $8 or $9. But we're getting a lot of negative feedback from social media, just people not happy with that price increase. So we'll see. I think that both companies would love to see tariffs resolved and reduced. Obviously, that would be great for both of them since a lot of their products do come from China. But still, purchase intent is at all-time highs for both companies, whereas the stocks are performing very differently right now.
Both stocks got hit hard on tariff news yesterday, by the way.
Right, but they're up today. I think both are up over 1%.
Today, right.
Yeah, so they've kind of rebounded those losses. But it's interesting, Landon, you mentioned the consumer happiness has changed. It still seems like people are pretty happy about Five Below. It's one of those things I look and I'm always so surprised how many people love this company, and people really tweet about that. So our first tweet is from Evelyn, not Evelyn Baker, who says, Five Below and Dollar General have been my go-to store stores. They got all those Christmas goodies. Five Below just blew my mind. I wanted everything. So Kevin, you mentioned, of course, the degree 5 below or 10 below for this seasonality. But Landon, I'm curious because this is a seasonal company, correct? Because Christmas and back to school sales, this really impacts Five Below.
Sure, absolutely. And I think people are going to go there more often. And, you know, if that's your gig, you're going to go in there and shop for all your buddies at Five Below. You know, maybe I don't want to be your friend, but, you know, you can find a lot of cool things in there. But yeah, it is a little bit seasonal, but we're seeing all-time highs for both of them. Obviously, we want to see how it goes through Christmas, but right now, very strong. And you mentioned happiness. I talked about how Five Below went from 80% down to 70%. Dollar General's at 64%. So Five Below still has a happier customer base despite the higher prices. So that's pretty interesting. They're very happy customers. They're just a little bit less happy than they used to be.
Yes, and I have to say the Dollar General tweets were a little bit interesting this morning, so I had to kind of pick through those. Our next tweet says, Target is hella expensive. I'll stick to Wally World and dollar stores, Dollar General, Dollar Tree, and Family Dollar. So if you compare these two, of course, a Target, totally different kind of company, but they're all kind of the retail winners of this year. Wouldn't you agree, Kevin? Because Target has obviously been a retail winner this year.
Absolutely, and like I said, I think what Target is going to be, I really feel someone's going to write a paper on how well Target adapted to this new environment and what they did and how they played the long game versus the short game. So I think Target is the leader of this group, and the stock is showing that, obviously. Now, you can't compare either of these names to a Target because I think Target is one notch above them.
And Target's not a discounter.
Right, exactly.
Or at least they're not seen as a discounter, and I think that actually works to their advantage. And I think you talked about it a lot in terms of Walmart's move to e-commerce and how that's allowed maybe people who shopped at Target to at least consider shopping at Walmart now, as they can do that without going online. But I want to come back to Five Below and maybe some of the happiness deterioration that you saw, Landon, regarding that move to 10 below. I mean, they're called Five Below. They're not mostly Five Below. They're not almost Five Below. That's their brand, and a move away from that when it's convenient for their company isn't necessarily probably what their loyal customers wanted to see. But when you're looking at something like Five Below, do you find that their move towards growing stores rather than growing just on their consumer, same store comp sales is just the nature of them being a less mature company than something like Dollar General?
I think so. I think it's lower hanging fruit. Dollar General's got 15,000 stores. Five Below's going from 750 to 900. And so I think if you're trying to increase sales, the easiest way to do it is to add stores. Getting those comps up, getting the same store sales up is more difficult. And I think it's something that you want to do once you are more mature, like you're talking about, like a Dollar General. And I think they're doing that very well, obviously. And I think investors like that quite a bit. Now, between the two, what's really interesting is, obviously Dollar General is much larger, $40 billion company versus a $6.5 billion company at Five Below. But the PE ratio and the value per store is really skewed towards Five Below. Got a higher PE ratio by quite a bit, by over 50% higher, and the value per store is almost 3 times as much. And so it's really interesting to see what investors are expecting. I think they're expecting a ton of growth from Five Below in the form of new stores, and Dollar General may be a little bit more saturated, and so they're expecting the average ticket size to go up. And I think both of them are trying to deliver on that.
Yeah, and real quick as we wrap things up here and kind of sum it up, Landon, we're going to be looking at Five Below for our example trade in just a second here. But basically, you have all-time highs for purchase intent are right there for both these companies. Tariffs do put pressure on margins for both these companies. But when you talk about Five Below, it's about $30 off its yearly highs here. So there is maybe a little bit more of a divergence in terms of stock price in that particular name. Is that what you're seeing as well?
Yes, that's exactly right. I think when you look at the stock, Five Below's off a little bit more, whereas Dollar General is much stronger. But I have a little bit of a fundamental nature in me, and I don't like the higher PE ratio and the value per store. But if you're just going based off of LikeFolio data, both purchase intents are killing it, and then it's just a matter of which one seems like a better value. Five Below is off a little bit, whereas Dollar General is doing better when you look at how it's performed over the last year or so as the stock price.
Color me simple, but if the Five Below to 10 below made the thing go down, test 1 below, right? See if that makes it more positive.
I think based off your
problem solved. There we go.
Based off your theory of weather, it doesn't.
All righty, Landon. We'll leave it there. Great stuff as always. We'll find out how they do when they both report here in the next 24 hours. But thanks as always. We'll look forward to talking to you soon.